What's going on, guys? Matty Ice here. Welcome back to another episode of Investing with Matty Ice, where I share my investing journey with you guys, specifically when it comes to income ETFs. I'm in the tank top today because it feels amazing outside here in Florida. I've actually got my windows down right now. The breeze is coming in. It's like the next couple of months, my favorite part of the year. I'm definitely taking advantage of it. It just feels amazing. Sorry to those of you that might still be buried in 5 feet of snow out there at this time of year, but that's why you got to move to Florida. Anyways, what I got for you guys today, we're going to be talking about buying BTCI at its all-time lows and whether or not that is a massive mistake or the opportunity of a lifetime. And this is really in response to some comments that I've received about how, like basically asking me, like, why on earth would you buy something when it's 40% down? Explain that to me. And I love all the comments. Even if we disagree, that's totally fine. I love engaging with you guys in the comments, and it leads to additional good content. But when I see stuff like that, I'm always reminded of the movie The Big Short, which if you guys have not watched, I highly recommend. There's so many good lessons about investing in that movie. But basically, there's a scene after the market crash of 2008 where real estate crashed and the stock market had crashed. Michael Burry, the guy made famous for shorting the real estate market, he received a voicemail from one of his investors that said, because he was buying stocks, and the investor said, the market's at an all-time low. Why are you buying stocks? Are you crazy? And I always go back to that. And it's just really bizarre to me why people don't get excited when their favorite assets that were great investments not that long ago are all of a sudden failing because they're in a bear market. Now, granted, some companies, some stocks do go to zero. You like look at your average penny stock. Okay, that's not really what I'm talking about, especially when we're looking at something like BTCI, which is associated with the greatest technological monetary revolution of our lifetime, Bitcoin, right? It's not, this is not some stupid penny stock, that trades over the counter at 5 cents a share that the Wolf of Wall Street would send you. Okay. That's not what we're talking about. All right. But my point is, like, it's just bizarre to me that people don't get excited to acquire a really powerful, just awesome, especially income producing asset like BTCI. And you could replace BTCI with whatever income ETF you want or whatever asset you want. But like, why don't you get excited when that thing goes on sale? People get excited about when the next iPhone goes on sale, or a TV that they want goes on sale during Black Friday. We get really excited about that. And that contributes nothing to our financial future whatsoever. In fact, it impedes the wealth building process because we're spending money on stuff. Now, I'm not saying that we shouldn't spend money. My point is, it's the psychology around these financial decisions, right? Why aren't we getting excited about an asset that we want to own long-term that produces a massive amount of cash flow that's associated with the greatest monetary asset on the planet? Why aren't we getting excited about that? To acquire it at a 50% discount? Okay. Well, we're going to talk about that. So, yeah, that's like the real question here. Because another thing that I've seen in the comments, and it's like some videos too that I've watched, is that people see a declining price as a warning sign that it's like the project or the company is failing and that it's going to zero. And I don't understand that unless you don't understand the asset you're talking about. Because see, I've done my research on Bitcoin. I've been buying it for a long time. I'm a long-term believer in it. I just don't see any scenario at all where Bitcoin would go to zero. Therefore, I think the same thing of BTCI, because it's associated with Bitcoin. As long as Bitcoin doesn't go to zero, why would BTCI go to zero? That doesn't make sense. And I understand the covered call strategy and how they're generating the yield in BTCI. So I understand this asset. And therefore, when the market, when the price tanks 50%, I can get excited about it because that's something that I want to own for a very long time, and it's at a discount right now. So just because the price is falling does not mean that it's some kind of a warning sign that the project is failing. Maybe it's just on sale. Maybe it's just going through a normal market cycle that assets typically go through. So are we making the mistake of a lifetime? Am I making the mistake of a lifetime buying BTCI at its all-time lows, or is this? Am I taking advantage of an opportunity of a lifetime? All right. So it all goes back to a very simple principle for me anyways, guys. This is just my thought process, not financial investment advice. You guys do whatever the heck you want. I'm just sharing my framework around this and what makes sense to me. It goes back to a very simple principle of investing. Buy low, sell high. That's it. Like, if you don't complicate it any more than that, you could probably build a significant amount of wealth over the long run. Okay. And even better, like buy low, maybe borrow against high. Because like I said, I'm, if we don't have to sell assets, especially when they produce income, do we really want to? Like if we could borrow against them, that's probably better. But you get my point, right? We want to acquire assets when they're cheap and potentially sell them or borrow against them later on down the road when they're at a premium. All right. But the problem is most people do the exact opposite. And I see this too with like, like pretty much every financial decision they make. We'll get into some specific examples here shortly. All right, but they buy at the top when everyone's excited and when the asset is popular, when it's in the news, when Bitcoin's going to $250,000. This is the cycle; it's going to $250,000, and then it peaks at 126. People get into the top, and now it's $67,000. Right? It's that greed and euphoria phase where nothing can go wrong, and this thing is going to the moon. Do I think Bitcoin's going to the moon over the long run? Absolutely. That doesn't mean we're not going to have market cycles throughout that process, guys, that we need to weather. But to me, those are gifts. The market cycles are gifts to acquire more of an asset that I've already wanted to own for a long time at a discount. It goes on sale. Absolutely. Sign me up. And then, of course, people panic when prices fall. They begin to question everything because they didn't actually do I think a big part of it is they don't do enough research on the asset. They don't have enough conviction, like long-term conviction in the asset. And so when it starts to tank, they think that they've made a mistake and that it's going to zero or not. So they panic sell to get out before they lose all their money. And unfortunately, what ends up happening a lot of times is eventually the asset recovers and they start kicking themselves, right? So they lock in this massive loss when if they were to just see the opportunity for what it is, it's a gift to acquire an asset at a discount, maybe acquire some more, strategically deploy capital. I talk about that on my channel all the time. Then they probably would have done okay. Now, are there some instances where we probably should get out while we can? Like the Terra Luna collapse. That was an absolute disaster, right? All right, but we're not really talking about that, are we? That's comparing apples to tater tots when we're talking about a shitcoin project over here and Bitcoin, right? Completely different worlds. All right, but that's what most people do. They buy when everybody's excited, they think it's safe and it's popular, and then they panic sell when everybody hates it and everybody thinks it's going to zero, and people get wrecked. Yeah, that's how most retail investors do it, unfortunately. All right, so yeah, the key insight here is oftentimes when it comes to investing, the success of that of investing comes to doing the opposite of what everybody else is doing the opposite of the crowd. And so I'm calling this the everything else standard. This is kind of the frustrating and just kind of bewildering part of these different financial decisions that we make. Like people actually do love buying things when they're on sale, but not wealth producing assets for some reason. Like I alluded to this earlier, like the iPhone. All right. Let me ask you this, guys. Do you prefer paying more for things, or would you rather get things that you want at a discount when they're on sale? Like, do you just really enjoy paying as much as possible for everything? I don't think so. I mean, I appreciate a good deal just like anybody else, especially when it comes to assets that I'm trying to acquire. But like the iPhone, would you rather pay $1,500 for an iPhone, or maybe wait a little while until it's $750 or whatever sale that happens? Maybe it's a Black Friday sale, July 4th, Independence Day sale, whatever it is, right? How about a TV? Would you rather pay $1,000 for that TV that you want, or can you maybe wait until Black Friday when it's $300? All right. Well, you get excited about that. The irony of that is like people will camp outside of these Walmarts and what are Best Buys and stuff for like days to get these things, to get their TVs and DVD players, if that's even a thing anymore. Their gaming consoles, probably a better example. But as soon as the opportunity presents itself to acquire an income-producing asset with massive asymmetric upside because it's associated with Bitcoin, is selling at a discount. Oh, that's all of a sudden risky. Oh, we don't want to be doing that. But you'll pay top dollar for your TVs and your iPhones, or you'll camp outside of a store for 2 days to get a discount on something that has absolutely nothing to do with building your financial future. That to me just does not make sense. Yeah, like I said, when assets go on sale, all of a sudden everybody's afraid. It's the end of the world, right? That doesn't really make sense to me. Here's another example. This one just kind of blows my mind. It's like with cars, right? So now I'm not saying we shouldn't buy cars. Obviously, everybody needs a car, but the psychology around purchasing the car versus purchasing assets, income-producing assets, is just mind-boggling to me. So people will pay, let's call it $60,000 for a car, and then like as soon as you drive it off the lot, you lose what, 20, 30, sometimes 50% of the value of that vehicle, depending, I guess, on the brand or whatnot. At least over the next 12 months, you're going to experience a significant drop in the value of that vehicle, 40 to 50%. kind of like BTCI is down 50%. But you know what the difference is? Your car doesn't produce income. It's not associated with the best monetary asset on the planet. It has nothing to do with building your financial future. And in fact, not only do people are people completely okay with paying top dollar, like again, buying at the top for a vehicle that's going to decline in price by 50% over the next 12 months. That's okay. But then they'll also go into debt in order to do it. So you're going to pay even more than top dollar because you have the interest that you need to pay. And then in addition to that, it loses 40 to 50% of its value, but somehow that's not risky. That's not a problem. But buying BTCI at its all-time lows is when it's at a discount, like it's not trading at its top anymore. It's not trading at its all-time high. It's trading at its all-time low, 50% discount, but that somehow is risky. Explain that to me, guys. That just does not make sense to me. All right, so yeah, the car produces zero income, costs money every single month. It's a liability, but people, again, I'm not saying we shouldn't buy cars. I'm saying people are totally okay. This scenario is not risky for some reason when it comes to building wealth. But buying an asset at a massive discount when it's at its all-time low, that is somehow risky. Explain that to me. So the strategy, I guess, again, this is my framework. When assets drop, actually, that's the next slide. Sorry. This is a continuation of like people panicking when assets drop, right? So BTCI, it's actually not 40% down. It's like 50% down right now, but it produces cash flow every single month and a significant amount of it at that. The current yield is 28%. And so the benefit of that is, let's say, unfortunately, maybe you don't have more capital to deploy, like strategically deploy and dollar cost average, right? Bring your basis down. It still produces a lot of cash flow. When you reinvest those distributions, you're bringing that cost, that overall cost down. And once the asset finally does recover, it's going to take a lot less to reach your break-even point than originally when maybe you bought it at the top, right? So as you're slowly bringing down your cost basis because of that cash flow, that's a massive benefit. Cars don't do that. All the other things that you buy don't do that. And plus, we have this asymmetric upside where if you're a long-term believer in Bitcoin, or you know what, plug in whatever underlying asset you want, the S&P 500, the NASDAQ, gold, right? NEOS, the fund that owns owns and manages BTCI and these other income ETFs, they have all types of different income ETFs depending on the underlying asset you want exposure to. So as long as you believe in that long term, then you're probably going to be okay. But it's not like you just own the asset and you have to wait 20 years to break even. It's producing cash flow now. That makes these bear markets, these market cycles, so much easier to endure. Because we're actually generating cash flow that we can use to lower our cost basis and provide kind of that cushion, right? So yeah, the narrative becomes, oh, this is risky because the price is coming down. Why would you buy something when it's that much down? Well, because I think it's pretty simple. You buy when things are low and you sell them when they're high. That's it. All right. And that's why most people, I don't think, build long-term wealth, is because they do the opposite of that. All right. So here's the thing, guys. Bear markets are totally normal. All right. I think this is a really good example. I've mentioned this on a couple of other videos, but as I record this right now, Microsoft is down 20. Actually, it's 25% now. It was like 30 or 35% last week. It's had a little bit of a bounce. But my point is, Microsoft is currently pretty significantly down from its all-time highs. Let me ask you something, guys. Does that mean Microsoft is all of a sudden going out of business because the price is coming down, because it's failing? No. Obviously not. Like, just because the price of something is coming down does not mean it's bad. 2008 financial crisis, good example. Real estate just tanked. Absolutely, just people got crushed in the real estate market. Does that mean real estate market or real estate is just not going to exist anymore? Real estate's a failure? No, because like if you were buying after the crash, then you did extremely well during the recovery. How is that any different than what we're doing with what I'm doing with BTCI, where we've had a significant market correction? It's like real estate. Okay, I'm buying real estate at a 50% discount because it's real estate. It's an asset. I understand the asset. This is a really good way to build wealth. Income ETFs can be the same exact thing, right? So, you know, Microsoft is down pretty significantly, right? And here's a question. Would you rather own Microsoft at 500? Actually, I think their high was like around $550 per share recently. A couple of months ago, or would you rather own it at $250 per share? Or you know what? Let's be more conservative. It's currently at $408 per share. Where would you rather own Microsoft? One of the biggest companies on the planet. Would you rather own it at $550 per share or $400 per share? Okay, you see my point? Of course, $400 per share. We want it at a discount, as cheap as we can possibly get. All right, so lower prices are often opportunities, not warnings. I love that takeaway right there. Lower prices, assuming it's an asset that you've done your research on, you know what you're doing, you're not gambling on like freaking penny stocks or just random stocks that, you know, you heard an influencer talk about on Fox News or whatever, all right? An asset that you understand you have long-term conviction in, that is very important. Assuming you have that, then lower prices are often opportunities, not warnings that something is failing, okay? So I'll go ahead and wrap up with this, guys. The investing rule, biggest mistake is buying when everyone feels safe. Like this is, this is going to the freaking moon right now. Maybe it does over time. I don't know. But when there's massive amounts of greed and euphoria and nothing can go wrong, the market's never going to come down, that's a good indication that it might be time to sell. All right. And then the opposite is true. When everybody is freaked out, everybody's scared, everybody thinks the world's coming to an end, the markets are never going to recover, it's usually a good time to buy, right? You're pretty close to a bottom at that point. Now, that doesn't mean, guys, that the price can't continue to go down. I guess I should address that. From like for BTCI, for example, you know, I'm anticipating another move down at some point. But see, here's the thing. I hope that happens because I have more capital ready to deploy to get this asset at an even more discount. Like if I love it at a 50% discount, I will love it even more at a 60 or 70% discount. So even if the price continues to come down, that's why we strategically deploy capital in dollar cost average, right? But that doesn't mean that the project is failing, okay? Better approach. Buy when there's extreme fear, sell or borrow when there's extreme greed and euphoria. What most people do is they buy the top, panic at the bottom. That's why they stay broke forever. I'm going to wrap up with that, guys. That's my rant for the day. But I hope that was helpful. That's just how I'm thinking about this. I think of where BTCI is right now, even Bitcoin, like just the opportunity of a lifetime to get into an asset that I have such strong long-term conviction in. So yeah, I am gobbling things up. Like as people panic sell, I'm panic buying. What would you call it? Panic buying, excitement buying? I don't know. But I'm buying what people are panic selling right now with BTCI and Bitcoin because I think it's a massive opportunity. But that's just my opinion. You guys do what you want. Drop some comments and feedback down below, and I'll talk to you guys in the next one. Hope you're crushing it to your success. Matty Ice is out.